This is the Equity Management Academy weekly podcast for December 6, 2021. Bitcoin. Fed's cheap talk creates deleveraging and massive bottom. Summary. Powell was renominated as Fed chairman, which empowered him to talk about tapering the Fed's bond buying and possibly raise interest rates. This talk has hurt stock prices this past week. However, there is little chance that the Fed will raise interest rates in the next months or even year. If rates increase, defaults would explode across the world. Trader University recently posted a report on U.S. debt and its effects on the U.S. dollar as the world's reserve currency. Chairman Powell tried to inflate our way out of this debt, which was good for those who hold stocks in real estate. Stocks in housing prices rose rapidly, but those who do not suffered from inflation, such as rising gas and rent prices. This began to threaten politicians and their re-election prospects. Powell was renominated as Fed chairman, which empowered him to talk about tapering the Fed's bond buying and possibly raise interest rates. This talk has hurt stock prices this past week. However, there is still little chance that the Feds will raise interest rates in the next months or even year. The global economic system is too leveraged to raise interest rates. In the early 1980s, the U.S. debt to GDP was about 30% when Chairman Volcker raised rates. Today, our debt is about 120%, which makes it extremely difficult, if not impossible, to raise rates. If rates increase, defaults would explode across the world. The last time the Fed was tightening in 2018-2019, Bitcoin fell from 20,000 to 3,000 and stocks did poorly. But such declines were short-term. In the long term, both recovered. Today, even just talking about the Fed buying fewer bonds creates the stock market. So the Fed does not actually have to do anything. And it craters the stock market. Powell just needs to talk about tightening, which causes stocks and cryptocurrencies to fall. The Fed would continue to do this until something blows up, such as a stock market crash, which is impossible to predict but will occur at some point. There could also be a new virus variant and a lockdown or some other factor that will damage the economy, and the Fed will have to start printing money again. If U.S. Treasury yields spike while stocks are crashing, the Fed gets worried and will stop any talk of tightening. There is a back and forth between inflation and deflation, with the Fed making announcements to cause spikes up or down in stocks and cryptocurrencies as they attempt to keep the economy on an even keel. Over the long term, Bitcoin is still more than double where it was at the peak before the last Fed tightening. Even with the talk of tightening, some will blow up. That will cause the Fed to open the spigot again and print money, causing stocks and Bitcoin to roar up again. We are delighted to be able to buy Bitcoin at these new lows. It is a great opportunity to add to your position for the long term. If you own Doggy and coins, XRP or Solana, they are less favorable and would not be as comfortable about the future. However, the current Bitcoin bull market is not over. We're expecting a major move up at some point for Bitcoin. Strategy. In order to determine and identify the highest probability factor for us to enter a trade, we use the variable changing price momentum indicator. This report was written on December 1st, 2021. Bitcoin monthly report. Summary. The monthly price momentum of 48,644 is bullish. The monthly VCPMI of 60,300 is bearish price momentum. A close above 60,300 stop negates this bearishness neutral. If short, take profits 50,740 to 44,040. As I write this report, we have activated daily buy triggers. Close above 50,800. 800 will confirm the bottom is in place as we integrate the weekly and monthly buy triggers. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes. Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. I wanted to share the report with you and take a look at what the market has done since. And what we see here is that we came down to a low of 47,520, and we have reverted into a buy trigger on a monthly basis from the buy signal of 50,740 as was published on December the 1st. And so when the signal is activated, and now that we have seen the completion, you might say, of this correction from November 15th, we have come down to the extreme below the mean. This is what we call mean reversion trading, and this is what I look for, basically, at the highest probability trades above the mean or below the mean. And we use the variable changing price momentum indicator that is basically a combination of pivot points, Fibonacci structures, wave counts, and vortex mathematics to give us this simplistic pattern, you might say, that gives us a lot of tremendous information. We are using Heikin-Aishi charts, which are very, very closely, you might say, harmonically to the variable changing price momentum indicator, in that it identifies the momentum of the market. And the basis of this algorithm is basically a price momentum indicator, variable changing price momentum indicator, in that it identifies the breakout or the momentum of the market when it comes down to the mathematical extremes below and above the mean. The green color is my average price based on our indicators, and that monthly is 60,300. And so we have seen now the market come down to the extreme below this average price, and we're looking at about 50-50 standard deviation using the average price, when we come down to the extreme below the mean of by one, we're looking at about a 90% probability relative to the implied volatility of the mean. So we're in a buy mode, and we've recommended our traders, our subscribers here in the private trading room, basically to cover the shorts if you were short on this correction, and to take advantage of this very, very strong signal that essentially gave us a buy trigger. When we take a look at the daily information, at the daily chart, for example, we can see a little more clearly the pattern unfolding. And here yesterday is when we basically activated on a close about 50,800, which was published, that this would activate a buy trigger. So we're moving now above the buy two level, and the target is 60,300. If we just add conventional Bollinger Bands, I want to see where it is in relation to it, and you can see the confirmation comes in pretty close, that between all three indicators that we're using here, it validates the code, the signal, the logic, which I'm sharing with you here as a self-directed individual, basically how to activate and identify trigger points. Now, when you identify your trigger point, obviously you want to know where your protective level is. So automatically, most conservative traders can use the close below 50,740 to protect your position conservatively. In this kind of a market, it's a very volatile market, so I would recommend a close below 50,740 as your protective level. The target already has been identified as 60,300, and so how you manage it from here is basically the self-directed strategy, which is based on your profile in terms of how you see risk and money management. Everybody, what I've learned basically after so many years in this business is that not every trader is homogeneous. And we're all different in a sense when we talk about our profiles for risk and money management. My risk may be different than yours, my choice, my comfort level. And so this algorithm, this methodology gives you the independence for you to use it as a trading tool to drive your trading. And depending upon your profile, then you can manage that risk accordingly. So when you understand that this is a buy, obviously, trigger point, then you have to take a look at the market and see the best way to enter the market that would suit your profile. You don't want to overtrade it. You don't want to buy. In other words, you don't want to buy something that you can chew. You want to make sure that it's comfortable. And so when we talk about risk, it's got to be comfortable and disciplined, methodical, if you want to trade the market and be around for a while using technicals, using mathematics. I have found that if I use fundamentals the fundamentals lag the market. They lag the mathematics, and in particular, when we're looking at this kind of an instrument, which is a virtual instrument, it's a virtual currency. So we're long on Bitcoin as per the monthly report indicated. We'll take a look at gold and silver here in just a couple of minutes. Let's take a look at gold here. If we take a look at the numbers on the left of the chart, they're basically the numbers for today. And what we see here is that the market is trading around the daily average of 1782. At 5:45 a.m., we came down to the buy one level of 1774 and activated a buy trigger. This bar basically was the completion of the bearish price momentum that was activated at 5:15 a.m. And this is the pattern completion. The signal, the target was completed, and it went neutral here and activated a buy trigger at 5:45 a.m. The price was 1776. The target was 1782, and we are completing it as we speak. When the price reaches the average prices, it has completed the pattern, the previous pattern, and the AI recommends for you to go neutral and let the market identify what it's going to do in terms of unfolding the momentum. Now, what we're doing here is we're defining a day trade. Underneath this, we are carrying our longer term position, which is the core position is bullish. And we're looking at the day trading algorithm and see if we can identify some day trading opportunities, obviously. But right now, when it's trading around the average price, it basically recommends to go neutral. You completed the pattern from below. We waited until this price momentum activated the highest probability trade. It came in. It gave us a buy trigger. The pattern is completed. So it's neutral. Let's take a look at silver. Silver is in the same pattern with the average price daily of 22.39. Not quite coming down to that buy one level of 22.20. So it found buyers at a higher price, and it reverted, and it's still neutral because it's trading around the average. So the action is in Bitcoin. And that could be the leading indicator, the leading asset, you might say, that's leading the correction, the adjustment here that we made after this massive sell-off through some of the stops that were taken out, and the market has reverted already close to 5 points off the lows. Now, for those that are following the methodology here of the variable change in price momentum indicator, that when long, activating some of this buy triggers on a daily basis, as you can see here, the price now has reached the extreme above this mean, above the daily mean, completed the target above. The second target that is looking for daily is 52,897. When the price is in this area in red, it begins to identify the extreme level above the mean, or the extreme level of standard deviation, that you're looking at the possibility now between the sell 1 and the sell 2 level of 90 and 95%, that potentially you could see some supply come into the market, more people taking profits. And what's going to determine the momentum of the market is how the price behaves, meaning how it handles the selling pressure. Even here, it completed the pattern, and pretty much it activated a bearish price momentum and reverted because it found more buyers in the market. And that determines, obviously, the momentum. If you get more buyers, they take out the supply over here offered, then this price, or this resistance, you might say, or this target zone, becomes the support by trading above for the next target above, which is 52,897. Let's just keep an eye on the market here for a little bit, and let's see what the market wants to give us today. We got the first indication of supply by the bar turning red. And it's bouncing off a Bollinger resistance level that is also confirming resistance. You could see a little more supply coming into the market. The area that we're looking at is called distribution of supply. When this price reaches these levels, the expectations are anywhere from 90 to 95% that we're going to experience some supply come into the market. That does not mean that it's going to change the bullish complexion of the signal. What this means basically is that the price level has reached the extreme level above the mean, where it makes sense based on standard deviation to lock in some profits if we bought it on yesterday's signal. Thank you again, everybody, for this great session here, and I look forward to seeing you next time. In the meantime, have a great trading day.